Hello and welcome. This is the Market Wrap, and we are here to tell you all that is moved in Indian equities today. Now, we're ending the Nifty on a somber note, at least as far as the trade this week's concerned, but the earnings season has kicked off with Infosys earnings coming in largely in line. However, there has been a little bit of a disappointment when it comes to its guidance going forward. But to make sense of the Infosys earnings as well as the outlook on the markets, we have with us market expert Sharmila Joshi. Sharmila, thanks for joining us.
Yeah, good to be here.
Yeah, well, before I come to you on what to make of the earnings, Shraddha, I'm going to ask you to take us through the Infosys earnings. Tell us what's gone down.
Absolutely, Agam. Just three key takeaways. One, the net profit fell 2.8% on a Q-on-Q basis to 3,603 crores. That was in line with what Street was expecting. Second, the guidance has been lowered to 6.5% to 8.5% for FY18, slightly below the consensus estimate. So that was one point where the disappointment came in from. And thirdly, they've set aside up to 13,000 crores, which will be utilized for either dividends or buybacks, and that factor also sort of failed to cheer the investors because the stock slumped nearly 4%.
Right, so Sharmila, naturally my first question will be that what have you made of these earnings? And with a follow-up, has the guidance been conservative, especially considering the fact that they've constantly lowered their earlier guidance through the previous financial year?
Yeah, so I think, first things first, if you just look at the numbers per se, yes, I think they were a tad bit under what market was expecting, so not a big disappointment. And I think if you look at what was happening with the stock last week, I think there was a big expectation that they're going to cut guidance much more than what they have.
Right.
So market was sort of already building that in.
Right.
And again, if you look at the way markets have been, with going almost towards 9250, 9300 kind of levels, IT and Infosys had hardly participated.
Right.
So I think in that sense, perhaps, I would have expected the stock not to react as much as it did today. I think we've seen almost a 3.5% kind of cut, but I don't think that there is too much of a downside left from this level, given the fact that not just in the last month, but in the last year, IT as a sector has underperformed. So yes, I think earnings that bit under, as we were saying, and little disappointing. Coming to their guidance, I think yes, I think that's where the market was expecting a big cut to come.
Right.
So that they did it, in that 6.5% to 8.5%. While it is disappointing, I would really look at it as a positive, because simply because what you had sort of thought was going to happen with the stock, that has not played out. So it's a little better than in fact what I was expecting.
Yes.
So I was expecting them to cut guidance even more. What I perhaps would have expected a little more is, and I mean to an extent we did hear that the market sounded, the management sounded reasonably confident. So I think that was a good takeaway, because in an environment like this, with what's happening not just externally but even internally with Infosys, for Mr. Sikka to come out and sound quite happy and quite confident, I think is a good sign for the stock going ahead. So let's see where that takes us. Unfortunately, I mean, if you look at Infosys, it always gets whacked on results day, and if you look at it in retrospect, this guidance earnings, it really has it has no relevance.
Right.
If you look at it 2 or 3 quarters down the line. So you have to, I guess, you have to just go with the mood of the market and digest the earnings.
Okay. The other question was with capital allocation, and this was, this is an extremely important part of all the reports that came before Infosys earnings. Now, they have allocated around 13,000 crores. And again, this is of course to buybacks and dividends. Is this because they are out of ideas, they do not have enough opportunities in inorganic growth, and they really don't have many ideas even in local markets that will lead to growth, and that's the reason why they are doling out a higher sum this time?
Yeah, I think it's possible, because I think this is something that market sort of participants have sort of debated through the day, because typically their dividend payout is like, if you take last year for instance, with the interim and what they've announced would come to about 25.75 rupees.
Right.
Here you're already talking of it'll go, I think, towards 70 is the figure that we get. But of course they've specified that this will be, as you said, dividend and buyback. So maybe they will still go with that 25 or 26 rupee dividend, and the rest will be sort of earmarked for buyback.
Right.
But yes, I think this sort of did get debated in the market today, that why couldn't they just buy another company, because for them to grow from this size, an inorganic kind of a route would have been better than buying back shares. But at the same time, buyback also sort of denotes a certain confidence in your business. So I think both ways there are pros and cons. But yes, I think I would, as a investor, I would have preferred it if they had actually invested this money in an inorganic sort of a buyout, maybe even 2 years back.
Right.
I think they waited too long on this.
Okay, and finally, next week we will have TCS as well. What are your expectations there? Any surprises?
I hope not.
Right.
So I think that whatever little lower profit or whatever is expected, I think what 2% or whatever, I hope it comes in line with that. I think it's also going to be interesting because this will be their first quarter with a new CEO now that Mr. Chandra is sort of out of the with Tata Sons.
Right.
So it will be interesting to interact with him. I think we'll be hearing him on a sort of a that kind of a public platform perhaps for the first time. They don't give a guidance, so that's out of the way anyway.
Right.
So let's hope there's not too much of a disappointment there.
Absolutely. Well, with that, Shraddha, I'm going to actually ask you to take us through what's happened in the markets. We're not exactly ending on a very jovial note.
So, Agam, it's a cut of about 0.5% for the benchmark indices for the week. In fact, today's loss, this is Nifty today. So today's loss really takes the index back to its 3-week lows, and in fact today was the worst week in 2017 for the Sensex index also, and this is even as metals and IT stocks were dragging the index lower. European markets were also trading weaker, so that didn't really help either. But Sharmila, on your thoughts on the market, do you think this trend is really looking weak now, and what are you advising clients to do? Do you expect more caution to come in the next week?
See, very honestly, the band that we are stuck in, I think everybody has been discussing this for the past 3 weeks, that it's a little tricky because you are on the higher side of the PE band, and for market to move up from here is that way really going to put us in the next sort of a territory as far as bull markets go. Right. So that will take, I think, some courage for the market to really go there. So it's sort of finding its space within that. And I'm not really surprised at this week's close because this was a truncated week. You have you woke up to bad news, so you have all this geopolitical sort of thing going around, and you don't want to go on a weekend with long positions with market at this level. It's as simple as that. It's really as simple as that. So it's not a big negative for me, but at the same time, as I said, for markets to do substantially better from here, I think it's good that we spend time here.
All right, Agam, fresh thoughts seen in Nifty futures?
As usual, and this is becoming a little bit of a trend over the past couple of days. But when it comes to options, what we saw yesterday was a shift in the open interest, a maximum open interest from the 9,000 level to the 9,300 call, which means that the resistance has lowered further, at least based on the maximum open interest. On the downside, we have 9,000 standing fine for the provider support. With respect to what's happened today, we're looking at a substantial increase in the 9,200 and the 9,300 calls. So overall, not much has changed except for the fact that we are looking at more of a build-up in the 9,300 level with more resistance there. And well, we will be keeping an eye further on how these positions develop. But for now, as far as the broader markets too are concerned, we're not looking at a very positive note. But before we go to the broader markets, why don't you tell us a little more about what's going on as far as the overall picture is concerned?
Absolutely, Agam. One would have expected IT stocks to have not fared very well today, but on the contrary, it was also metal stocks which were under pressure. So you have Hindalco, you have Tata Steel, these were amongst the top losers. Of course, you have your IT stocks, Infosys, HCL Technologies, TCS, all of them seeing cuts well over 2%. On the other hand, it was oil marketing companies which were bucking the trend. So there you have IOC, BPCL, which were really sitting on gains of well over 2 to 3%. Indiabulls Housing Finance, Bank of Baroda amongst top notable gainers for the Nifty today. But even if we talk about the week, oil marketing companies were really doing well. So BPCL, IOCL and Bank of Baroda again top gainers for the Nifty index for the week. Adani Ports, Tata Steel, Hindalco, so metal names against top weekly losers. So off late we have seen iron ore prices which are really hurting metal companies. Coking coal prices have also risen sharply owing to supply disruptions, which is really the reason we're probably seeing some profit booking coming into these names. Sharmila, any advice on metal stocks which everybody has been dumping in the last week or so?
I would say, let this news sort of play its course, but I think overall I'm positive on the stocks. So perhaps you're not going to see a rally in Hindalco the size of which you saw in the last year and a half. So you know it went from 80 to 200 plus whatever level. So I don't see that kind of a rally, but definitely I think they will be one of the sort of performer sort of sectors for the year.
Okay. Agam, mid caps of course were sort of also impacted today, and of course the market breadth was on the negative trend.
Yes, the market breadth was unfavorable. Let's take a look at what's going down here. We have a lot of correction in Tube Investments, which is down by as much as 4.7%. IFL Holding, which has been so strong over the last quarter, we're looking at some amount of correction there as well, down 4.3%. Thyrocare Technologies, JSPL, RBL Bank and Dalmia Bharat among other losers. We have Piramal Enterprises, which has once again gained 8.2%. It's followed by Indiabulls Real Estate, up 7.3%. Sterlite Technologies, Punj Lloyd, Den Networks and Gayatri Projects all gaining well over 5%. So as you can see, the market breadth may be unfavorable for now in the broader markets, but the momentum is still lying with a lot of these gainers. And with that, Sharmila, my final question for you is, what do you prefer in this market? Are there any pockets of value, or will you still wait to get in, buy into something?
So for me, the preferred bet is still in the mid cap sort of space, but we've seen what's happened with valuations as far as a lot of the stocks you like sort of are concerned. So I think it's a good idea to let the earnings season sort of play out, right, and then take a call. But obviously I think everything that I'm buying or that I like is clearly from that space. So it's a mixed bag. It could be stocks from the chemical space, it could be some from the metal play, it could be some consumption items, but it's all within that basket.
Okay.
And I would really now wait for the numbers to come.
Alright, so we are waiting for earnings to come along. Sharmila, it's a pleasure speaking with you. Thank you very much for your time. And we are looking at another very important week, considering the kind of earnings that we are keeping an eye on going into next week. This is all that we have for today. Stay tuned in the Bloomberg Quint, and we'll see you next week.